All right, so the House just passed the affordable housing bill and just sent it to Trump's desk for signature, which he's expected to sign it. But I think there's a lot of hidden things, and I want to talk about it. We're going to call this one how Congress just took a swing at the all cash stranger, because on the surface it looks good, but down below I think there is a lot of things hiding. Okay, so we're going to talk about the pros and the cons and explain to people how to prepare for this and why it isn't what it seems. As I start, real quick, if you want to learn about creative financing when it comes to mortgages and learn all kinds of tricks and tips on how to get mortgages now and leverage money insanely in the future during this continued downturn in real estate, I'll put a link down below. We're in the pre-filming discount phase. All right. That's going to be over soon. So let's go ahead and shrink my big head and talk about this. All right. So now, first, I want you to understand that as I read this, I want you to think about, when we go over the pros and cons, how this can affect you and also how you can make money from it, because it's really, really important to be thinking that way. All right. So let's step back and picture a Sunday open house or a Saturday open house, and they're becoming more and more prevalent, right? Think about a young couple, their first real jobs, a pre-approval letter in their hands, a folder of paperwork that they've actually read 3 times. They love the place they're looking at, and they offer $5,000 over asking price, and they lose the bid, right? That's happening a lot. Not to another family, but they lost it to an LLC that nobody in the room has ever heard of. An all cash offer, inspection waived, and it's going to close in a week. Now, if you've tried to buy a house in the last few years, you know that exact couple. You know how they feel, and you might be that couple yourself. And this week, for once, Washington actually noticed, because on Tuesday night, the House passed something called the 21st Century Road to Housing Act, 358 to 32. Pretty much unanimous, right? The Senate cleared it a day earlier, 85 to 5, in a Congress that can barely agree on what day it is. That's not a vote, that's a stampede. And President Trump is supposed to be signing it the day this video comes out. So the question is, what does it actually do? Well, there's 2 big levers. The first one is the one that made headlines. The bill caps how many single-family homes a large institutional investor like BlackRock or Blackstone could buy. They hit this at 350 houses, and the door closes. You're done buying anymore, right? Private equity firms, the big real estate trusts, and the people who turned that open house into an auction, you couldn't win. Break the rule, and the penalty is $1 million, a violation, or 3 times the price of the house, whichever hurts more. So that sounds really great, right? The second lever is actually a lot quieter, and honestly, it might matter a lot more. You see, the bill goes after the supply of homes. It pays cities to loosen the zoning regulations. It greenlights pre-approved homes or home designs, so a townhouse doesn't sit in permitting for 2 years. It strips the rule forcing factory-built homes to keep a permanent steel chassis, and those homes cost about half as much per square foot. More duplexes, more townhomes, more of what economists politely call the missing middle. So what they're saying is they're going to issue the ability to make a bunch of cheap homes, little tiny boxes, as things get smaller and smaller, because the middle class is getting poorer and poorer. Now, here's what I have to be really honest about, right? If you're picturing Wall Street suddenly dumping thousands of houses onto the market next month, you need to slow down. Those big investors nationwide, they own less than 1% of single family homes, okay? The bill does not make them sell the ones that they've already got. It just stops them from buying more. And clever lawyers have already noticed that you can split 350 houses across a dozen smaller shells and just keep on going. All right. Now, Redfin's chief economist put it really bluntly. To get rid of private equity and the flood of starter homes does not magically appear. Freddie Mac says that the real drivers of the actual high prices were never the investors. It's that we stopped actually building and everyone moved to the same expensive cities. That's why we saw massive migrations out of large cities and states like California and New York, just inundating places for a while, like Florida, Texas, and other states, right? So this bill isn't a switch, it's a road. The name, for once, is actually honest. But here's the thing about that couple at the open house that I mentioned in the beginning of the video. In Jacksonville, investors, they own more than 1 in 5 single family rentals. All right. We're not talking about just the big companies. We're talking about investors. In Phoenix and in Dallas, they bought tens of thousands of homes in just a few years. In those neighborhoods, taking the biggest buyers out of bidding isn't symbolic. It's the difference between a counteroffer and a closed door. And the thing is more and more people are complaining about this, yet they don't want to become investors themselves. It's a story of you're too late to the game because you didn't try. And in this flip, as the housing market accelerates its downturn, you're going to watch these large company and investors flee, lose their properties. And it's going to reset just like it did starting in 2005 and ending in 2009. Now, the houses won't appear overnight, right? Prices won't tumble insanely by Christmas unless we have interest rates that skyrocket. But the next time that couple we were talking about walks into an open house, the stranger with a suitcase of cash actually might not be standing behind them because of this legislation. And after a decade of getting outbid, that's worth noting. That's a really cool thing that could happen. So now I want to break down the advantages for buyers, home buyers, and then we're going to talk about the disadvantages, okay? So first advantage of this bill is there's going to be less competition in the hottest markets. The 350 home cap actually targets private equity firms and REITs. The national impact is actually small, but in concentrated metros like Jacksonville, Phoenix, Dallas, pulling the biggest cash buyers out of the bidding directly helps the individual buyers compete, all right? The next thing that's positive is more supply comes in over time. When zoning reform incentives, like what a $200 million competitive grant program that's going to be out there, you're going to see pre-approved home designs, streamlined environmental reviews, and the manufactured housing chassis change everything. Right? That's going to get more homes built, especially cheaper, missing middle-class homes like townhomes, duplexes, and ADUs. All right? The next thing is that there'll be cheaper factory-built homes. Dropping the permanent chassis requirement makes manufactured housing easier to site permanently. It runs half the cost per square foot of a site build. All right? So you're going to see those flooding the market. Then you've got a renter's path to ownership. When investors sell certain build-to-rent homes, renters get a right of first refusal, and they have a first look window built. It's almost like this on-ramp made for the current tenants. So that's really exciting too. So getting those offered to tenants and making them homeowners, rad. Another thing that's positive is that there's more buyer support and oversight. Reforms to HUD, housing counseling, and financial literacy programs, plus a new renter outreach resource at HUD for tenants is big. It's a big deal. And lastly, as far as the positives, it's durable, bipartisan, and signed into law, less likely to be whipsawed than a partisan measure or executive order. So that's really exciting. Now we've got to talk about the disadvantages or the limitations of this for home buyers. And I want you to be thinking how you're going to take advantage of this, right? This is why you need to have a killer credit score and get ready with all these insane loans that are hitting the market right now. All right. Again, don't expect the prices to lower immediately. I know home prices are off their highs for the last 3 years, but don't expect a massive crash, except unless, like I said before, interest rates skyrocket, right? Now, supply takes years to materialize, and institutional investors own under 1% of single-family homes nationally, right? Freddie Mac found that they're a minor factor versus underbuilding and migration. Again, people moving to small cities where there wasn't a lot of homes. That's what ran these prices up and made the shortage, okay? Now, there's loopholes already visible. This is a negative. Investors can split holdings across smaller entities to stay under the 350 home cap, and existing portfolios are actually grandfathered. So there's no forced divestiture. I pronounce that word wrong all the time. So they keep everything that they already own. All right. Now, build to rent stays a rental. The final bill kept the build to rent exemption and dropped the earlier 7-year forced sale rule. This is good for preserving rental supply, but it means fewer investor built homes ever convert to owner occupancy, right? And then there's the possible knock on effects for renters. Critics warn that the restricting investors could actually trim rental availability or chill new construction in some segments, because a lot of new construction has been funded by these large hedge funds and investor pools to build these massive tracts of homes that are built to rent. Okay. So if that slows drastically, it can affect the economy pretty fast. You're going to start seeing it at Home Depot and Lowe's annual reports or 10K for filings and all of that stuff. So that's stuff that you want to look for, right? Now, the last thing I really want to put out there is that this only works if cities cooperate. You see, the supply provisions are mostly carrots dangling in front of local governments. If localities don't reform zoning and permitting, the new homes simply don't get built. And then you won't see an additional source of homes. Okay. So in all reality, this is what I want to say, and I think this is the last thing. I believe that this is going to create a multi-year opportunity for buying homes. And because simply investors are going to be disappearing, and you're going to see some panic in the industry as far as construction. And then lastly, you're going to end up getting just inundated with bad news as this AI bubble pops and interest rates eventually go sky high because investors are freaking out over inflation. I think this is just such an exciting time to get ready. If you want to get ready with the financing, get your credit score high. If you want to start learning about these crazy loans, we're already back to ninja loans and amazing loans that banks or non-banks, are offering now. It's different after Dodd-Frank. Links down below. You can lock in your price because I'm going to keep making new programs, new lessons for that course as I learn about all these new crazy loans that are coming out. All right, with that being said, the Real Estate Ninja is out.